Right now, in the next 12 months, over 600,000 people across the UK are going to submit a mortgage application, pouring their hopes, their savings, and their future into a pile of paperwork. And nearly 1 in 6 of them will be rejected outright. They'll get the email, the letter, or the call that delivers the devastating NO before they even get close to owning their own home. But here's the bit that nobody in the mainstream media is talking about. The reasons you're getting turned down have almost nothing to do with whether you can actually afford the property. We're not talking about people with massive debts or zero income. We're talking about millions of ordinary, creditworthy people who did everything right, saved the deposit, sorted the finances, and still got told to walk away. Banks are using criteria that haven't been updated since the 2008 crash, judging you based on outdated assumptions, and in some cases, rejecting perfectly capable borrowers because of a single, tiny, forgotten mistake you made 5 years ago. If you're trying to buy your first home and you're watching every property you want disappear while you scramble to figure out what went wrong, if you're self-employed and you're feeling like the entire system is designed to keep you out, or if you've been saving for years only to be met with constant rejection, what I'm about to show you is going to make you genuinely angry. Because the mortgage rejection crisis isn't about affordability anymore. It's about a broken, rigid system that punishes anyone who doesn't fit into a neat little box that banks created back in the 2000s. Every rejection doesn't just delay your purchase, it actively damages your credit score, making the next application even harder. It's a vicious, soul-crushing cycle that traps people in a financial limbo for months, sometimes years. By the end of this video, you're going to know exactly why you're being rejected, what banks are intentionally not telling you, and most importantly, the specific steps you can take to bypass their rules and secure your home. Before we dive into the absolutely maddening reasons behind these rejections, do me a massive favor and make sure you're subscribed to UK Property Insights. We are the only channel breaking down the real, emotional, and systemic reasons behind mortgage rejections that the banks would prefer you never knew about. Hit that button now and let's expose the truth. Alright, let's start with the single biggest reason for mortgage rejection in the UK, credit history. A shocking 29% of people who get turned down are rejected specifically because of thin or impaired credit. But here is the insane paradox that should genuinely shock you. A thin credit file doesn't mean you're reckless with money, it often means you've been too responsible. This is the invisible barrier that locks out millions of first-time buyers who are actually diligent savers. A bank looks at your file and sees almost nothing: no credit card debt, no car loans, no store finance. They see a perfect history of paying rent on time and saving diligently. The problem? They view this prudence as a massive risk. Their models are built on seeing how you handle debt over time. If you've never borrowed, they can't predict your behavior, and that uncertainty, that lack of data, results in an automatic NO. Imagine being penalized for living within your means, for not playing the debt game. The system is literally punishing you for having financial discipline. It forces you to take on calculated, artificial debt, maybe a small credit card you pay off every month, just to generate a paper trail for the very people who claim to despise debt. This is the moment the anger hits you: you have the money, you're responsible, and you're being rejected because you haven't jumped through the hoops of a financial system that demands you prove you can manage debt you never even wanted. And this injustice is particularly brutal for young buyers, where 4 in 10 people aged 18 to 24 had to overcome at least one rejection. They are 5 times more likely to be turned down than someone in their late 40s because the system simply assumes they haven't had enough time to build a strong profile. It's a systemic, ageist bias that keeps the next generation struggling. But that wasn't the whole story, because the system's contempt for your financial choices is even more apparent when you look at how they treat people who try to earn their income differently. If you're self-employed, an entrepreneur, a freelancer, or a contractor, the mortgage system becomes genuinely cruel. 22% of rejected applicants are turned down purely because of their employment status. Not because their income is too low or their credit is bad, just because they don't receive a neat, monthly pay slip from a standard employer. The UK has 4.4 million self-employed workers, 14% of the entire workforce. These are the people driving small businesses, generating income, paying taxes, and yet, when they try to buy a home, banks treat them like they are on the dole. The statistics are horrifying. self-employed first-time buyers are literally twice as likely to be rejected compared to employed buyers. This isn't a minor hurdle, this is a systemic brick wall designed to keep independent workers out of the property market. They demand 2, often 3, years of perfectly submitted, professionally prepared accounts, showing a predictable, steady income, completely ignoring the fact that fluctuating earnings are a fundamental reality of running a business. The worst part: 40% of first-time buyers actually gave up being self-employed entirely just to secure their mortgage. They packed in their businesses, took salaried jobs they didn't want, purely because the system penalizes entrepreneurship. Think about that immense sacrifice, sacrificing your independence, your passion, your future business for the simple stability of a predictable payslip, all because the mortgage system is too lazy or too rigid to properly assess modern income. Recent data shows that when self-employed applicants search for options, 50% are getting rejected outright before they even get to the formal application stage. 87% of self-employed workers believe it's harder for them, and they are absolutely right. This isn't a small problem, it's a national scandal that actively discourages the very spirit of business the UK economy relies on. The feeling of this rejection is intensely personal, it's a dismissal of your hard work, your talent, and your commitment to your career. And what happened next would shock everyone, because while banks are dismissing your current success, they are holding tiny, painful mistakes from your distant past against you with unforgivable intensity. Now, let's talk about one of the most insidious reasons people get rejected, an issue that most people have absolutely no idea is destroying their mortgage chances: payday loans. If you have ever taken out a payday loan in the past 6 years, many banks will reject your mortgage application immediately. It's an automatic, unthinking no, with no consideration of your current financial situation, your salary, or your savings. Payday loans stay on your credit file for 6 full years, and even if you paid the loan back on time, in full, with 0 issues, the simple fact that you used one is treated as a massive red flag by lenders. They see it as evidence that you couldn't manage your money and needed emergency cash just to survive until your next payday. Here's why this is so deeply messed up. Payday loans are often taken out during genuine, life-altering emergencies. Your motor breaks down and you need it for work, your boiler packs in during the coldest winter, or you have an unexpected family expense. These aren't signs of financial irresponsibility, they are normal, awful life events that can hit anyone. But banks don't care about the context of your emergency. They just see the term payday loan in your history and make a sweeping, cruel assumption that you are incapable of managing money. The real kicker? Some of these lenders actually advertise that taking out a loan and repaying it on time will improve your credit score. That's a devastating lie. Mortgage lenders don't care that you paid it back, they care that you needed it at all. So, if you took out one of these loans years ago, thinking you were building credit or just surviving a temporary emergency, you have actually unknowingly sabotaged your chances of getting a mortgage for a full 6 years. It's an unforgivable sentence for a brief moment of desperation. But the emotional torture continues, because while they judge your past, they use a completely hypothetical, unrealistic financial scenario to reject your current affordability. This is where the bank's logic completely breaks down, rejecting people for reasons that make absolutely no logical sense. Lenders assess affordability by looking at your income versus your outgoings, which is fair, but the way they calculate this is completely broken. Imagine this: you are currently paying £1,500 a month in rent and are applying for a mortgage that would only cost you £900 a month. You're already proving you can afford more than the mortgage payment, but banks don't care about reality. Instead, they stress test your application by asking a hypothetical, almost malicious question: could you still afford this mortgage if interest rates suddenly jumped by 3 or 4 percentage points? Even though rates aren't going to jump that dramatically overnight, even though you'd have years of warning, banks reject you based on this hypothetical, worst-case scenario that may never happen. This is particularly painful for people with existing debt. If you have credit cards, student loans, or a car loan, banks deduct all of that from your available income before they even begin to calculate what you can borrow. Even if you're managing those debts perfectly, paying everything on time, the mere existence of the debt dramatically reduces your borrowing capacity. This is why a person comfortably paying £1,500 in rent gets rejected for an £800 mortgage. The system doesn't care what you're actually doing, it cares what their outdated, fear-based formulas say you should be able to do in a doomsday scenario. Then there's the issue of income type. If you're on a 0-hours contract, if you're a contractor, or if your income includes commission and bonuses, banks get nervous. They want to see 3 months of stable, consistent income. If your income fluctuates, even if your average annual earnings are fantastic, they reject you because they can't confidently predict your income next month. Hospitality workers, salespeople, gig economy workers, all treated as high risk, despite managing their finances perfectly. Here's another rejection reason that catches people completely off guard, and it has absolutely nothing to do with your financial choices or how you earn your money. Sometimes, the rejection has absolutely nothing to do with you. It's the property itself that's the problem, and this is where the system is doubly cruel. If the surveyor identifies issues with the house, non-standard construction, structural concerns, properties in high-rise buildings with cladding problems, or ex-council homes, lenders can reject your application outright. You might have perfect credit, stable income, and a massive deposit, but if the bank doesn't like the bricks and mortar, they won't lend on it. This is particularly brutal in areas where the only affordable properties tend to be non-standard construction. You finally find a place in your budget, you get excited, you start the application, and then you get rejected because the property has a flat roof or a steel frame, an issue you didn't even know existed. But the rejection can also come from a simple, silent error in the process. Errors on your mortgage application, a simple typo, a wrong date of birth, an incorrect address, or undeclared expenditure, can get your entire application binned without a second thought. Lenders rarely investigate these errors, they just see that your application doesn't match their records and they throw it away. And here's the worst, most sneaky part. You might have errors on your credit file that you don't even know about. Old addresses that haven't been updated, joint accounts with an ex-partner that are still financially linking you to their credit history. If their credit is terrible, it affects yours too, even if you've managed your own finances perfectly. This is called financial association, and to fix it, you have to file for financial disassociation with the credit agencies, a process that takes 30 days. But most people only find this out after they've been rejected. The first instinct after rejection is to immediately apply to another lender. Don't do this. Every application creates a hard search on your file. If you apply to 3 or 4 lenders in quick succession, you've just created a pattern that screams financial problems to future lenders, making them even less likely to approve you. It's a downward spiral that locks you out of home ownership for years. The system is clearly rigged against the modern buyer, but it's not a fight you have to lose. Now, let's talk about the specific countermeasures you can take to regain control. The reality is that the mortgage system is fundamentally broken for anyone who doesn't fit the traditional employee profile. But despite how rigged the game is, there are 8 critical, actionable strategies that work to dramatically increase your chances of approval. This is how you fight back. 1. Get all 3 credit reports, the full diagnosis. Before you even look at a property, you must get your credit reports from all 3 main UK agencies, Experian, Equifax, and TransUnion. Your score can be completely different with each one, and you have no idea which one your lender is going to use. Check them thoroughly for errors, old addresses, missed payments you never made, and especially any financial links to people you're no longer associated with. Dispute anything that's wrong immediately and get it corrected. This single step alone can be the difference between approval and rejection. 2. Wait on payday loans. Patience is your weapon. If you have any payday loans on your file, I know this is frustrating, but you need to wait. If the loan is less than 2 years old, your chances of approval with a mainstream lender are dramatically lower. You must try to wait until it's older, ideally 4 or 5 years. Some specialist lenders will overlook older payday loans, especially if everything else is solid, but if it's recent, you need to work with a specialist broker who knows which specific lenders are more flexible. 3. Professional self-employed accounts, the paperwork advantage. If you are self-employed, stop scraping together your documents. Have a qualified accountant professionally prepare your accounts. You need at least 2 years of tax returns, ideally 3, presented in a clean, professional manner. Lenders will often consider your most recent year's income if it's higher than your average, but you need to present it perfectly. Self-employed applicants with messy paperwork get rejected even when their income is strong. It's an unfair rule, but it's the reality you have to beat. 4. Reduce your debt to income, slash the monthly outgoings. Pay off credit cards, personal loans, car finance, anything that's eating into your monthly income. The lower your debt to income ratio, the more you can borrow and the more likely you are to be approved. If you're carrying £5,000 on credit cards, paying that off before you apply could increase your borrowing capacity by tens of thousands of pounds because banks are no longer stress testing that £5,000 of debt against your income. 5. Increase your deposit, reduce their risk. This is blunt, but it works. A bigger deposit reduces the lender's risk, which makes them far more willing to overlook other small issues in your application. If you can get to a 20% or 25% deposit, you'll have access to significantly better rates and a wider pool of lenders who will consider you. Yes, it means saving for longer, but it dramatically improves your chances of approval and often secures a better long-term rate. 6. Don't apply for new credit, look stable. In the year before you plan to apply for a mortgage, do not apply for any new credit. No new credit cards, no car finance, no store cards, nothing. Every application creates a hard search on your credit file, and too many searches make you look desperate to lenders. If you need to buy a motor, pay cash or wait until after you've secured your mortgage. 7. Register to vote, quick trust builder. This is one of the quickest, easiest ways to improve your credit score. Lenders use the electoral roll to verify your identity and address, and being registered makes you look more stable and trustworthy. It literally takes 5 minutes and can genuinely make a difference. 8. Work with a specialist broker, the secret weapon. This is critical. Do not go to a high street bank. Work with a specialist mortgage broker. Not just any broker, but one who understands complex applications. If you're self-employed, if you have any history of adverse credit, or if you've been rejected before, a good broker knows exactly which lenders are most likely to approve you. They can match your unique situation to the right lender, allowing you to avoid unnecessary rejections and wasted time. Brokers have access to lenders that don't deal with the public directly, and those lenders are often the ones who are more flexible and willing to look past the broken rules. We are at a tipping point. If nothing changes, rejection rates are going to stay high, possibly even increase, because the gap between how people actually live and work and how banks think people should live and work is getting wider every day. More people are self-employed, more people have variable income, and the mortgage system simply isn't adapting fast enough. Banks are still using affordability models that assume everyone has a stable 9-to-5 job with a predictable salary that increases steadily over time. But that is no longer reality. Millions of people are fighting an uphill battle against a system that was designed in the past and is failing the creditworthy buyers of today. The feeling of that rejection is personal, it's frustrating, and it is entirely unfair. But now you know the rules of their broken game. You know the secrets they don't want you to discover. Don't let a flawed, outdated system define your future. Know the rules, follow the counterattack strategy, and get the home you absolutely deserve.